Hi, this is David Brown. I want to talk to you about what the market wants now that the holidays are over. I mean, last week with a holiday spirit permeating the atmosphere, the market took off and just about every facet of the market was up 3% or more, except two parts, and that is in utilities, which were down, and telecoms, which barely eked out a profit. And the reason is that they're both high yielding, and high yields are under suspect right now because of the possibility of yields rising due to the fiscal cliff solution. So we're back now from the holidays, and unfortunately we've got to face the worries again. Three that I want to bring to your attention. The first of those is, of course, the storm. Sandy is a terrible storm, was a terrible storm, caused a lot of havoc, and we won't know in the numbers that are coming out this week, next week, probably a month from now. The numbers will be impacted by Sandy, employment numbers, spending numbers, all kinds of numbers, and we won't know what's right, which is a problem with Sandy or which is a possible entry to recession. Moving on to Europe, we're back to that problem again. This weekend, Spain voted, and Catalonia, their most impressive economic subpart of Spain, voted in a number of legislators who want secession. Obviously, that's not going to help Spain in getting its problem solved, and it's going to cause problems with the whole European Union. Greece, they're asking the bondholders to take another haircut. That's going to cause problems and may or may not get done. I think they'll get done. It's just that we have these problems facing us again. Finally, Italy is slowing its growth yet again. Now back home, we have the fiscal cliff. And the good news there is, politically, I think it would be suicide to stand in the way of getting this fiscal cliff resolved between now and the end of the year. I don't mean everything's going to be resolved. I would bet that a lot of stuff's going to get kicked down the road. But there's going to be progress, and I think it's going to help the market to get that out of the way and be on about building our business. Our corporate coffers are flooded with cash, and they just need some clarity in where the government is heading before they start spending that. Given that, what should we invest in? Well, I recommend caution because of all the problems I just mentioned. So here's three ideas. Tesoro Petroleum, TSO, they're a refiner, PE 9, forward PE only 7, and a 13% growth rate. That's a stock you can hardly go wrong on. Another one is Kohlberg, Kravis, and Roberts. They're a major Wall Street private equity firm, think Bain Capital, although I apologize to either side that might be offended by the reference. They have a PE of 6.7, a projected PE of 6.3, but here's the crusher. They're expected to grow at 40 to 50% a year over the next 5 years. You can buy that for 6.3. Finally, let me leave you with a speculative stock. Q-Core has been in a lot of problems over the last 6 months, and its stock has fallen from a high of $60 to now well below $30. It was up 5% today, though. And this is a stock that actually makes money, $3 to $4 a share over the next year. They have drugs that deal with multiple sclerosis and drugs that deal with infantile spasms, and they're entering the rheumatology field. This isn't a startup. So that's what the market wants, stocks with an opportunity.